All right, good early morning, peoples. Let's jump in here to Roundhill with their weekly distributions, which seems to be all the rage right now after Yield Max is come out. That should be a little bit later this morning, although that's somewhat muted and a little bit confusing to many of you, I think, although basically they're not really paying weekly. They're just paying out, if you want to look at it one way, a fourth of their distribution, right? So they're taking one fourth and they're created four groups, A, B, C, D, and YMAG and YMAX will be distributing what they really earn for the month, since all the single stocks that they own only collect and pay monthly. So they're taking that money and then distributing a fourth of the payers on one week. So to me, it's a funky way to do things. But hey, a lot of you guys that are over margined and on margin and need it, um, I get why you want it, but if you look at a 5-year chart, there's really very little difference in the weekly and the monthly. Um, but so be it. I guess people are excited about it. I'm not really excited whatsoever. I don't choose to own either one of those funds, and I'm moving away from Yilmax for the most part. But I like Roundhill and I like what some others are doing. But I got a warning for you. I'm not the first to give it, and I won't be the last. So if you want to shoot the messenger, feel free to do it. I'll just ban you from the channel. So please be respectful if you disagree with what I'm going to tell you. That's all I ask. Then nobody gets banned or booted from the channel. Just, you know, respect other people's opinions just like I do. I don't always agree with other people. No one, if you're reasonably intelligent about this stuff, we all form our own opinions. All right, let's jump in. XDTE, S&P 500 weekly. Okay, 19.8, not quite 20 cents. So that's less than 66% of what it was last week, right? It probably is only 60%. It would have to be, 11, it would have to be 22 here. So what happened? Well, I'll leave that for you in Roundhill, since what I did do was go back and look at this. So with a 19.8, right, less than 20 cents paid for one week, and almost 80 cents in the month. But look at the yield drop, 19.95. Now we were actually up on XDTE, right? You see the green? All I did over here is every week I compare it to the previous week. So we had 3 weeks in a row where we went up in the underlying. So the higher the underlying, the lower the yield, if you want to look at that. That's why, if a stock is a $20 single income stock fund on YieldMax and it goes to 10, everybody complains, but an 80% yield on a $10 stock is a lot less than an 80% yield on a $20 stock. So anyway, it is what it is. I went through here and highlighted all the previous times where it was lower. So here's June 5th, April 29th, and June 5th, May 29, and May 21. There were three others. Okay, it's ironic that they run in groups here. April 16th, April 9th, and April 2nd. So those are the only times that it paid lower than the 19 cents. How much lower? 11, 16, 13. Here's a 19, very close, right? 19.5 instead of 19.8. 2 cents. Not much of a payer that week. 12 cents. Okay. So let's jump over to the NASDAQ 100 QDTE. I know a lot of you love this one, right? You perceive it as the higher payer, but I got news for you. Look at total return. It's not the higher payer. Well, it's not the higher total return. It may give you more in distributions, but where it giveth, it taketh. Okay. So 24.54 right away, 19.5, right? We paid 19.8 in the other one. But anybody can see that you also, if you bought right now in order to get that dividend, you had to pay $51.78 to get almost 20 cents a week. Well, down here you only had to spend 41.39 to get that. So you see the yield is higher, and it's almost always higher. So with it being this low of a distribution, let's go and look at some times. Now, in some fairness, I just looked at anything 19 and under, right? So this one technically is more, but it fits the mold of what I'm looking to do here. Give you low comps, right? Everything up here is higher. So in XDTE, we had 6 occurrences. Here, we've only had 3 occurrences where it's been this low. And technically, this one was higher, but you get what I'm saying. They're close enough. I call them the same, right? This one actually yielded less because the fund was a higher price then. Um, So how we doing overall? Well, I don't imagine you're doing well if you own a lot of this and you got it. So let me get to some key data here and tell you how we're doing. Okay. So this is part of where I'm going to talk to you about some issues I think the market has. All right, but before I do that, so for those of you that are new, some of you are used to seeing this. So here's the inception price. I use March 7th for the inception price, right? Doesn't matter what your investment is. It's meaningless. Everything would be the exact same regardless of how much money you put in the fund. Um, your dollar amount here would change, but your percentage wouldn't, right? 10,000 would give you $129.60 that you declined in your NAV value. In other words, what did I pay for the fund? What could I sell the fund for now, right? So you've only lost in the S&P 500 1.3%. But in the QDTE, while you're yielding higher, right, you got $6.41 on this fund. And on QDTE, you've collected so far through all these payments. They didn't pay till what, 327, I think. I think that's the actual first distribution. Yeah, 328 they paid, but they declared on 325. But the fund came out on 39 or 310, right? We go and look at inception date. Yeah, 3.7. Sorry, guys. So anyway, this is your total distribution. So on a percentage basis, just doing the math, not annualized, you've gotten 12.22% return if you bought this fund at the beginning at 52.46 and you've received $6.41. This fund, I get why a lot of you like it. It's paid 17.74%. So it's yielding higher. Is that the only piece of the story? No, it's not. Let's go over like I preach. What's your total return? Well, your total return, if you've been in both of these funds since the beginning, okay, you've had a total return of 20.44% annualized. What about QDTE, the big payer? It's paid 17.74%. Well, you've only made 12.85%. Well, Bruce, how can you say that? Well, let's start with the good news. Let's take this one, $8.24. So you've owned it for 195 days. So in order to annualize that, I have to come up with my multiplier to create an annualized rate. So 1774 annualized, since it's only a little bit past halfway, right? In a year, you have 365 days, so call it 182 and a half. You're not that much past the halfway point. Otherwise, you'd double this. You'd have a 35% annualized return. So your annualized return on the dividend is 33.20%. Okay, well, Bruce, you said 1285. All right. Well, what's your loss? So if you bought the stock for 46 and you can only sell it for 41.39, that's a 10.87% drop. If you annualize that, okay, with the remainder of 195 from 365 gives me 170, right? So 170 days more says I'm going to have a 20% loss. So I take 33 and subtract 20. Over here, I have 2287, so I made less in my yield or my payback, but I didn't lose much, right? I only went from 52.46 to 51.78. It's negligible. So that's why I do it. I know a lot of you know this, but I just wanted to go over it. All right. So here's where I want to hit you guys with something. And I'm a firm believer in this. Okay. So this is from somebody on X that I've followed from time to time. What I like about it is not like I think I saw SoCal Stevo. Loves SoCal Stevo's channel. By the way, if you don't watch that, I think he's good. You know, he has money, he invests, he watches the markets. He certainly would be the first to tell you he's not an option guru or all those things. But I think he's got a lot of common sense and he has a lot of good things to say. So I watch and listen to him. And he just did something on, hey, I'm concerned about the market. Now, I think my data differs a little bit, has a few other twists and turns versus what Steve-O's talking about. But I think it's parallel in that there's an ominous issue out there. We just differ when. So the other thing I would say, whenever you're trying to look at rate cuts, we've had a lot of them. But have we had rate cuts where we've had the unemployment rate curving up? We've had a 2-year versus a 10-year inversion, right? That eliminates probably 70 or 80% of rate cut cycles that we're about to go into that were late. Okay. So the sentiment from the bulls is that rate cuts are suitable for the market. And generally that's true. Certainly in the long run. History shows that the market pumps on average, right? And Steve-O was kind of saying, hey, and he's correct about some of his data. September historically has been one of the worst months. I remember, what was it, in 88? I can't remember the exact year. That there was a big sell-off. I was young in my investing career, and I remember my stockbroker in the days when you had a broker call me, and she said, Bruce, oh my God, the market's crashing. I said, hey, I'm in a conference call. I don't have long to talk. Okay, I'll call you later, but it's ugly, right? And it was, whatever year it was. I don't actually recall it at the moment. Okay, so could we get one last pump? So on average, for 25 days after rate cuts, the market gets a pump. I've seen 15-day pumps, right? So anything can be expected. We may turn around and start down after just one day of being up. My gut is we're up, flat to up on the day of the announcement. Now, what could change that might be a 75 basis point. Remember, everybody was not laughing at me, and they were polite. Again, if ever you're going to criticize me or say I disagree, just be polite. Say, hey, Bruce, love your channel, or, give it a little bit of sugar and then throw the salt on there. Say, I don't know where you came up with that, but I see it this way. I love all that, right? Opinions are to be respected. It's just don't come out and bash the person, which, to me, you're just a troll when you enter that. Okay, so 25-day rate cuts, or 25 days after the rate cuts. All right. Could we get one last pump around the cuts? Absolutely. Or will this time be different? You know, and he goes on to say anybody who tells you exactly what's happened is lying because, well, they're guessing, right? We're all guessing to some degree. So be open minded, look at the data, and use your best judgment. Again, sometimes markets climb walls of worry. I'm sure some of you older investors have heard that over time. So here's a chart showing 3 or 4 other scenarios of the market, right? Other rate cuts. When were they? 81, 90, 2000, and 2007. So I'm guessing that one was probably around 90, 88 or 90, the one I was talking about, kind of that Black Monday, I think it was. Definitely was it could have been even October, because September and October are traditionally two of the worst months. Well, if this bounce happens for, say, 25, do they mean 25 trading days or 25 calendar days? Either way, that puts us into October. And also, guys, you're followed by an average of a 13-month sell-off. So this is kind of some stuff that could happen, right? Here we are. We're around 5,600 on the S&P. So what's the very worst thing that could happen? Well, in 13 months, we get down be 50%. That's pretty ugly. So everybody in here going, I want weekly, I can get more margin. All you guys are on big margin. Look out below. Now, does this mean it's going to happen? No. But guys, be respectful of the market, okay? If you've got cash and you got money and you're barely using any margin and you got plenty of cash if you need to, no problem. But if you're young, inexperienced, and you just think this is, you're going to get rich and you're going to retire at 35 and you're 28 now because you're going to get 75%, dividend yield every year for the next 7 years. I got news for you. You're not. Okay. I don't care if the market doubles from here. You're not going to get 75% yield. Okay. Month after month, year after year. It just doesn't happen. There's a balance. All right, Bruce, finish this thing up. So if we get this bounce for 25 days, what's your upside? Is 7%. What's a possible downside? 50%, right? And I've never seen a bull market that wasn't roaring that didn't have a 50% pullback. I think we're near a cycle top, and I think that we probably in the next 8 years might see a 30% increase in your major indexes. But I think there'll be some other sectors, some commodity sectors that could be up 300, 400, 500%. So again, wise money in the right areas could make you a lot of money over the next 7 or 8 years. But I think if you're just doing, which is exactly why I brought this up on the Roundhill world. For now, but I would say this. If you're a 25-year-old, you're a 30-year-old, you're a 35-year-old, and you got a 35 to 45-year investing cycle, by all means, go in your 401k, buy the S&P, take the same amount of money every week, every month, every 15 days, whatever your pay cycle is, and just ride it out. You'll be fine, right? But it's that short term, and what I mean by short term, 5, 8 years. There are periods that the Dow and the S&P for 10 years are flat. Now, that's not common, but it happens, just like the S&P 500 can triple in 7 years, 8 years. Doesn't happen very often. It's pretty darn rare. But anything can happen. But once you see that, it's just like red and black. Go out there to the casino, right? And just, or flip a coin, heads and tails. and watch, just do it and record what you did. You may throw heads 9 times in a row. You may throw tails 8 times in a row. But the law of averages said if you flip it a million times, you're probably going to be 50-50, right? Within, a minor decimal place somewhere there. It's just a law of average, and it's the same in the markets, people. Okay, so that's what I got for you. Sorry to, belabor this, but I think it's important that you see all sides. I hope this doesn't happen for everybody. I mean, but what do I see out there in the world? I see war. I see more war. I see recession. I see economic. I don't see any quick fixes, regardless who wins the election. I mean, I certainly have my views, and one side's scary to me, a lot scarier than the other. I'll let you guess on your views, but either way, either side's not going to accept the other. We may not even have another election in 2028 based on how bad this one will probably end up being and challenged and everything else. All right, people, that's all I got for you. I'll come back at you with some more. If you've noticed I've slowed down, I have. I'm working on some other projects and I'm investing more actively myself since I'm kind of getting out of most of the Max funds. I'll still report on some for you guys that want them, but I'm not going to do 6 a week like I was trying to do before. It just doesn't make sense. And as bullish as I am on GDX overall, right? Although if the market does what it's going to do, it's going to go right down with it. It's a stock first and foremost, right? The metals won't see that kind of pullback. They may see a 20% pullback. They won't go down 50% if stocks do. But anything that's a stock could well do that. Not anything, but more things. All right, peoples, that's all I've got for you. Bruce with Targeted Wealth Creation. I'm not a financial advisor. This is not financial advice. Have a good one. Bye for now.